GM. GM. So, daily levels. Today is Sunday, the 17th, I think. 17th of December. Closing in on Christmas already. Um, so, the market itself, I think, is going to remain tightly packed until probably Christmas. I've said now for a few days, since we dropped down on Monday last week, I said my expectation is for Bitcoin to move between 40 and 45, right? Don't expect that to change. I do think we test up here. We might not take the highs, but I think we go up as far as here. And then probably back down towards 40 and then finish the year somewhere in the middle, 42.5 would be my expectation. Because when you have these tightly packed consolidations, there's going to be a lot of stops built up on either side, right? Since we've went down just recently, and then we bounced up, and now especially over the past couple of days, the whole market is just like Bitcoin's just barely moving, and everyone's freaking out, talking about alt's gonna nuke and all this crazy shit. I don't see any alt nukes. I think people are badly positioned, right? I must have seen 20 posts from like Twitter influencers saying, "Oh, be careful, hope you took profits, nuke coming, big flush on leverage, I feel it, I'm sensing it." I was like, what? It's like the same dickheads who tell you the bonk top is in when it's down 40%. No, the bonk top was in on the day of the Coinbase listing, which I talked about on the day. Not saying that calling the top is any big thing, because I still think you shouldn't short it. That's why I didn't short it. But it took profit. That's all you need to be doing, because your risk reward is terrible on shorts in a bull market. If you look at Bonk, for example, I said this the other day, the top will be in on this day, most likely, because liquidity, right? It went from millions of dollars of volume to billions in one day. Volume is every executed transaction, every trade. Therefore, there has to be buyers and sellers, right? It can't just be sellers, it can't just be buyers. If somebody sells, someone else has to buy. If somebody buys, someone else has to sell. Now, of course, it doesn't have to be one person, and this is where it gets... this is where volume analysis gets even more useful when you see high volume on hyped up meme coins. Because if you have billions of dollars of volume up here, and you've been listed on Coinbase and the smaller exchanges, that means that whoever's the buyers on that side are much more likely to be larger in numbers, a lot of small buyers, because it's on the retail exchanges, because Bonk is a retail-friendly coin, and the sellers are much more likely to be smart money who have large positions from lower that are exiting their full position. So you might have, if you visualize it, you imagine you might have 100 people selling 100 million, right? And you might have 100,000 people buying $100 or $1,000, I should say. Understand? If you had 100 million of buying volume, but it was from 100,000 people individually, it would be a lot of smaller trades. But you could have the same 100 million on the sell side coming from just 100 whales exiting their positions, $1 million each. It's that disparity that is what will show you the likelihood of a trend ending. It's not always easy. There are ways with order flow and with watching the order books to see that coming in, to see a lot of small orders, but smart money as well, they can obfuscate, they can hide their trades through small orders. So you can exit $1 million order with 10,000 individual small trades. Very easy to program. But you just know this, all right? When you've experienced, I guess, or common sense would tell you that when something's up 100x, and then it does $1 billion of volume in a single day, it's not smart money buying when it's up 100x. But there is always a buyer for a seller in the order books. And so it's just far more likely that the big players now have the liquidity to exit those multi-million-dollar positions that they couldn't exit before because it would nuke the chart, but they're able to exit it because there's a lot more liquidity. Right? Volatility brings volume, and volume attracts liquidity. When volume rises, it attracts people to come in and sell. Because you don't sell at a certain price, you sell when you can. If you've got $1 million position, and if you wanted to sell it down here, but it would move price, if the books were thin, and it would move price, whatever, like 20% to sell, let's say 10 million, because there's not that much liquidity on the order books, then when we're up here, you could sell the same 10 million, but only move the price 4 or 5%. That's what you do, or even less. At the very top here, when you're billions of dollars coming in, you could exit 7-8 figure positions with very, very little slippage. That's what's important. Execution. So, top's in on bonk, not surprising. I mean, that's pretty obvious at this point. Bitcoin going sideways. Total 3 still looking very good. Outperformance on total 3 is probably yet to come. That does indicate later stage rally, of course. If total 3 starts breaking out and Bitcoin doesn't, there would be a divergence. But these divergences tend to go for usually several days, if not even a week or two, before a more significant correction. And at least how it is here, this wouldn't have me thinking about the top. Can it drop back? Sure. But I think it's still by the dip at this point. But it's Sunday, right? People were all getting bearish on Saturday, as they always do. If there's any fucking down move, I mean, it's bad positioning if you're bearish here. You should be long from lower. There's been ample opportunity, right? We're long a cash, WorldCoin, flying, several other coins. And if you're in spot on a weekend, which you shouldn't be chasing things on leverage on a weekend, you won't be feeling that irrational fear. The people who are all, firing out the warning signals yesterday, you can just tell they're over leveraged. Right? This is what had them scared. This 2% drop. Look at it in the context of the move. Nuke incoming. What? It doesn't mean we can't dip, right? Of course we can dip. Absolutely. But all these other nukes they talked about, like those nukes over here. This was the big flush in alts. Big flush, 20% wicks. But never broke the uptrend structure. And even then we had a big correction. But it wasn't. It was setting up a consolidation. It ran up. Massive flush. But it's just retested and held. The market's going up, not down. Now the top will come at some point, and we will reverse and we will go lower. But if you're long from lower via spot, you're not under any pressure here. Now you can definitely take profit if you want to, if your system tells you. But the only people sweating here are over leveraged. So if you're worried about the top, you're sweating on it, remove your leverage. Simple. And if you're worried because maybe you bought spot at a bad price, right? You bought spot in the last few days, well, that's not good either. Overall, not a whole lot to really worry about. And so I look at the data. You got Bitcoin. Look at the global funding rate, global open interest, and Bitcoin's funding rate. So Bitcoin's OI, Bitcoin's funding rate, we'll OI weight that. We'll look at the altcoin funding rates, excluding BTC, and then the altcoin open interest. And I'll look at two things. So I mentioned trading analysis yesterday. This flush was the second biggest long liquidations since FTX. Okay? Those massive long liquidation flushes almost always mark a local bottom. And it did, yet again, mark a bottom. And now we're grinding down with low volume, low impulse on a weekend towards that level. That is not something to really be worried about. Right? We simply had another flush, ran up, people got excited again, got long, bleeding down into it, bleeding down into it. We're just retesting. The inefficiencies are above, not below. Right? We've actually filled up pretty much every inefficiency that we've been setting. We wick down, bounce up, retested. Rallied up, retest those inefficiencies. See the gaps where there's just green candles? If there's a long wick or just green candles with no retest, it comes back and retests them. We run up, right? All the hype around the FOMC pivot, the Fed pivoting, but left some gaps. Wick down, close the gaps. Rally up, just retrace down, retest the wick. It's very, very, very common. This is actually very efficient price action. This is how consolidations work, ranges work. This isn't a range, this is a consolidation, right? Compressing. This is going like that, right? And the price is just consolidating. There's no big bullish, no big bearish signal off this. And it's because we had the flush, and so people who were long got wrecked. That's the most important thing. Also filled the inefficiency here. People who are long got wrecked. If they were over leveraged, of course. No reason to be getting wrecked on here. You should be long spot from much lower, or waiting patiently for a good entry. Then we bounce up, and this is, if you want to understand one of the most important things for the next bull market, for the rest of this bull market, whatever, is that after these big flushes, there is always going to be a strong automatic reaction, a big bounce, because this candle should not have went that far if it wasn't for just simply leverage. Okay? This candle would normally stop around this support level here, but it wicks all the way down because it's going to liquidate people and take out the leverage. So it obviously doesn't spend time down here, as it was only stopping people out. There were just stops being triggered, liquidations being triggered. Bounces all the way back up. But here's what happens. You spend a few hours up here, everyone builds longs again. What happens? You build a long, it bleeds back down, stops them out, makes them panic, stops them at the lows, they panic and close. So they panic or start shorting, bounce up again. They're like, oh no, I was wrong, I need to get long again. They get long again. They bleed back down into the gap. They get short again, and they get chopped to pieces. Then we have a nice diagonal breakout, Fed, pivot, rally up. Everyone gets excited again, long, long. Oh no, I get leverage liquidated again because I'm stupid. Rallies back up, oh, I missed the bottom again. Long, bleeds out, spend the whole weekend bleeding. And that is why they're all bearish. Think about it. All these pricks online. They're bearish because they are wrecked. And they've tried the long every dip here. And even though Bitcoin hasn't made a new low, right, since fucking Wednesday, or no, Monday, a week ago, but they've tried long and long and long and long, and it just keeps coming back. and it's just consolidation. Now, what you do want to keep an eye on is the open interest, because everyone's saying alts nuke, alts nuke, alts nuke. It's like, well, let me see. Take away Bitcoin from this. So from the nuke candle, Bitcoin OI is up 4%. Bitcoin's price is up 4%. So that's pretty balanced. The altcoin OI is up 7%. The altcoin funding is broadly flat, right? Before the nuke it was high. The nuke then reset it. And so since the low of the funding, it has risen slightly. We are above neutral, but not at the crazy levels we've been at. Bitcoin as well. Funding was high. The flush reset it. And Bitcoin's flat. Bitcoin's funding is pretty much flat. Slightly on the positive side, 0.111 and 0.0171 for alts. This little tick up here in OI, right, is where alts started to lead a little bit. As you see here, Bitcoin's OI and price are pretty much equal, which is good. Alts, yes, OI is up 7, which is about 1.2 billion of fresh OI added on alts since then. It has been as high as 11% up, 1.74. Now it's down to 1.1. So 500, 600 million of that has been taken. Definitely, there's a little bit of excess there. So if you're an over-leveraged trader, you're probably still a bit at risk. But absolutely nothing to worry about if you're in spot, waiting to buy dips, wanting to buy lower, or just in your positions from lower on spot. Nothing. Absolutely nothing to worry about. Now, it doesn't mean we can't go down. Absolutely we can go down. But the level of the reaction I've seen has been, I think, over-exaggerated. So all of this way we've had consistently high funding. Well, positive funding, right? Positive funding in a bull market is normal. A lot of people have bear market PTSD, but you always have positive funding in a bull market. Futures will always slightly lead in a bull market. Then you will have leverage flushes and it will reset back to more healthy levels. But pretty much always then you're going to have them leading because the market's bullish. Right? It's only when you see extreme rate of change that you start to witness some of these leverage dips. Right? Like here, we pushed into that last high. And then after the high, Bitcoin's funding went crazy after we'd peaked. Altcoin funding went crazy after we'd peaked. So you see here, price was down, but funding kept rising. And then we slid off to the side, and price dropped off. Right now, we don't really have that. We had a bit of a spike up in funding here, but the little flush on Friday going into Saturday, Friday going into Saturday, took most of that out. So I'd say we're at fairly healthy levels. And I expect Bitcoin to hold these lows and then push towards the highs. Probably this week. But if it doesn't, if it goes lower, well, below this level is absolutely a buy for me. Right? Below it, reclaim it, long. Targeting those highs. Because grabbing all that liquidity will surely set up a decent move up towards the highs. I'd have high confidence in that. That would be an excellent setup for a trade. That'll pull alt, if that happens, that'll pull alts down quite a bit. So then if you are interested in certain alts, well, chart them, find out where your areas are that you're looking to buy, and then get your position's built. But I think with the nature of all the fear and all the crying over leveraged idiots who are panicking, even though the market's already consolidating nicely. I just suspect that Bitcoin's actually going to go the opposite way, because when people are talking about this, they're all urging caution. It means they're closing their positions, they're shorting, they're exiting. Anyone who's saying nuke incoming, understand, if someone's saying nuke incoming, they're short. Because they can't not put their fucking ego aside. If they're trying to say a nuke incoming, they're trying to literally manifest it. So they're going to be getting short. Either that or they're just LARPing. Because if you're saying nuke incoming, why aren't you short, right? If you're so convinced there's a nuke, why not get short? If I was convinced there was a nuke coming, even though it's a bull market, I would get short. If I had some really strong reason to believe that there was a massive nuke, well, why wouldn't you short it? That's what traders do. But I find that stupid in a bull to try and predict nukes. Especially 7 days after we had one, 6 days after we had one. Significant one. The biggest correction we've had this bull market. Biggest correction we've had since October. The second biggest liquidation event since FTX. I mean, doesn't mean I'm right, but almost every time you have a big flush like that, it does mark a local bottom. So I'm not too concerned because I'm not over leveraged, sitting in spot. I recommend you do too. You'll do fine. So, student was asking about momentum, and I'll answer this question just to finish. He said, is momentum, he asked what style do you trade to some of the other students. Do you trade momentum or mean reversion, like range trades? And it's the same thing. So every trade you take should be a momentum trade, because at least you should aim for it to be. It's okay if the trade doesn't move. If you're trying to take a trade and it doesn't move super fast, I mean, that's fine. You're not Nostradamus. You're not going to always perfectly predict everything that's happening. But it's quite obvious here that this is momentum, and that's like a momentum trend long, yeah? So if you're long there, you're riding the momentum. But this here is also momentum, and this is a range trade, right? So what does that actually mean? Well, if you're on lower time frames, I'll just zoom in here so I can go to the lower time frame. If you're looking at this 4-hour range, right? Let's say you got your range high, you got your range low, which would have been set down here. I've talked about this range many times. Price moves up, sets a high, retraces all the way back down, so it's very unlikely to still be a trend, right? The trend momentum is now replaced with sideways action. And if you're trying to take a trade from one side to the other, you want to ride momentum within that. I'll use this example because it actually does take the highs out. In a range, price will go from range low to range high, and back and forth, vice versa, several times, generally, right? So what you're trying to do is spot momentum for it to go as fast as possible from one side to the other. That's why taking the false breakouts works. Because when it grabs the liquidity and it comes back inside, then it's done everything it needs to do at the range high, and it should move quickly to the range low. So even though, let's say here, for example, it moves from the high it sets down to the low, it takes a few days. It takes 4 or 5 days, right? But this one happens all within the same day. So what you're trying to spot, and it doesn't mean you have to, but if you go 15 minute, go to a lower time frame, right? This is a 4-hour range. Let's say you're looking at a 15-minute chart. You see the price moving up into a false breakout. So it trends up, inefficient move up, sweeps the highs, falls back inside, gives you 2 retests on the 15-minute of that range high, the red horizontal line, and rejects off it. And then it even gives a complacency bounce, so you could enter there, you could enter after this candle close, You could enter after these retests, whatever. The entry trigger is up to you. But the point is, price has shown momentum up into the range high, rejected off it. Your job then is to take the trade and play it to the range low. You'll see that in this instance, the move happens very fast, happens within a matter of a couple hours, right? And then on down, a few hours later, to the ultimate low. This is not me saying that you should have caught this move. I'm not saying it's easy to always catch these moves. I'm saying that even if you're trading in a range, what you're trying to do is catch a trending fast momentum move within that range, rather than having to sit in like this, right? So imagine you got long at range low here. You're trying to avoid these type of moves, because look how much longer that takes, and yet it doesn't even get anywhere close to the range high, right? If you play it on, I think maybe it eventually reaches it. But these are the perfect trades. These are ones you're aspiring to find. And then this one does eventually make it here, but look how much longer it takes, right? Because when you study enough price action, you'll understand quite quickly that, let's say it does this, you get in long here, it comes back and retests. Like, that's not very momentum, right? This one didn't do that. This one just moves all the way down. Then it runs up, takes out these highs, falls back inside. Spends a long time chopping in this area. Chopping. Comes back and tests again. At this point, you're like, yeah, this isn't a momentum trade. So the earlier you can spot that, you could possibly exit. Whatever, based on whatever your rule would be, right? And then the move you actually end up getting is this strong momentum move here that does just go all the way up. So how could you identify that move? Again, I'm not saying that there's any one way to do it or that it's particularly easy, but your goal as a trader should be in a trade for as little time as possible and get the maximum amount of price movement as possible out of it. This is for many reasons. Don't stress about always having really short trades. And I don't mean short as in time frame. You could be trading on a daily, a 4-hour, a 15-minute, a 1 week. It's relative. If you're in a 1 week range, right? If you're looking at a weekly range, let's say, have we got any decent weekly sideways ranges? You don't tend to get them on Bitcoin, really. Here's probably the best weekly range we had, right? Got a weekly range here. And so if you're looking at that weekly range on Bitcoin, then you're looking at a daily trend move from one side to the other. Okay, so within this weekly range, the fastest daily move would be this one, from the range lows to the range highs in about 5 or 6 days, versus the short that came after from the range high to the range low was also fast. So there was two nice fast moves within that range. But then if you had to flip long at the lows again, you end up sitting sideways for all this time. Okay? So these are your momentum moves. This one is not. And the question is not, if you had got long here and your stop was below there, you would have never got stopped out and you would end up winning. Again, that's fine. But then if you're trying to improve, you should say, well, how would I have identified that this wasn't momentum? What you do is you look at momentum, right? And you'll notice that when it trends with momentum through a range, it goes up or down. It doesn't go like this, up and down initially, up again, and this and that, right? So when it's done this part of the price action, this isn't momentum. It's not momentum. Momentum is straight down, straight up. So you could watch that happening and say, all right, I'm going to take profit here. Right? You entered there. You took profit there. You still took profit. But it's okay to say, per your system, that's not momentum. And why? Because if this isn't momentum, it's actually more likely to come and stop you out. Now, this one didn't, but a lot of times it will. Because when it loses momentum, it puts those longs at risk. Then you'd say, okay, I'll wait for momentum to build. It grinds all the way down. You don't want to be short here. Grinding down into the lows is terrible. No momentum, no momentum, no momentum. Boom, engulfing candle. 1, 2, 3, right? Somewhere in here, you'd want to be asking yourself, has momentum shifted here? We just had, sorry, ID's pumping. We just had this slow, shitty grind down, and then all of a sudden, boom, away it goes. Is momentum building up here? It certainly was. Go to your lower time frame, you see on your 4-hour chart. If it doesn't fucking rug me. I'm on trading view. What? What's going on here? Anyway. Don't know what happened there, but I'll just go back quickly to this last point. Show you what I mean. What the fuck? Maybe it's the MEXC chart, doesn't go back that far. Okay. Anyway. Let me just finish it. You could go back. You could see it. And then you look at a shift in momentum at some of these levels and say, alright, now has momentum picked up for us to go to this other side? Possibly. Yes. Also, if you're right about momentum, you can get better entries. Because if you're right with momentum here, that it had grinded down and the momentum was shifting, it won't come back to the lows, and it probably won't even come back down to here. So again, you can back test this. But when the momentum begins from range high to range low, it leaves lower highs and lower lows. So you can enter, you can compound if you're more experienced. You can compound these trades more aggressively. That's how you compound within a range when there's momentum. And then you understand that if you try to do that here, right? You got this sweep, it pushes up, you get long, comes back, you get long again, and then you get stopped out on your compounded trade. That's a good sign that momentum's not there. Because if there was momentum here, it would have just went like this and continued all the way to the highs. But it's not going to do that every time. You can't have momentum moves through the range every time. But as you progress as a range trader, that should be your target, right? That should be at least what you're aiming to achieve. Yeah? So, it's a little mini lesson. GM. See you all later on the massive, huge, fucking enormous, super, mega, hyper, bulls only, crossover stream. GM. See you then. 11 PM UTC. GM.